All right. What's going on, everyone? Welcome back. All right. I know I'm starting a little bit after than I normally do because I had to get my video out today, which actually I published my video. It's not up yet, but it'll be up. It may actually be up as I'm streaming here because I got it completed before the stream. So that's like a big deal for me. Anyway, welcome to the stream. If you're new here, let me explain to you how this works. Let me say, hey Kai, how are you? Good to see you. I got my new look. Check this out. I got my new calendar here. In fact, let me make this a little bit better looking. Hold on a second. Let me make this take up the whole screen here so it doesn't look so unprofessional. Because I got to have a polished look now. All right, hold on a second. What's going on here? Hold on. Let me fix that. Hold on, you guys. All right, I'm gonna fix this. Hold on a second. Hold on. Okay, I probably should have had this done earlier, right? Let me just do this here like this, and I should be able to bring this over. No, doesn't let me do it. Okay, hold on, guys. Hold on. Hold on, folks. Let me get this over here so you can see it. All right, hold on. All right, this should work now. If I just do this and I do this, there we go, folks. Got the economic calendar. It's a scam. All right, anyway, guys, so if you're new to the stream, welcome me. Just explain to you how this works. First thing we're going to do is we're going to go through the economic calendar. Then after that, because that's really kind of the main point of the stream, is to get a preview, an outlook for the week, so you sort of have an idea of what you can anticipate in terms of risk, and prepare yourself and refine your plans and all that sort of thing. Right? That's really the purpose of this stream. So we're going to do that, and then we're going to take a look at charts. Right? I'm not going to go over Bitcoin or Ethereum or altcoins specifically. I have my other channel for that. And if you want all the details, you see that QR code on my screen or that link at the top. You go to that link that takes you to my Telegram channel, and all the details are in there. Bitcoin levels, Ethereum levels, any other trades like Link or anything else that I'm looking at. It's all in there. Plus, you can see the YouTube videos that I publish. Like I said, I published today's video like an hour ago. So it'll be appearing on the other YouTube channel probably as I'm streaming here. So, that's where all the details are for Bitcoin and everything else. All right. But if you have questions about stocks, we can take a look at the bond market, gold, silver, or ETFs. If you want to take a look at like a Bitcoin ETF, we can certainly do that. All right. So anyway, so what are you guys saying over here? Hold on, I can't see. Oh, there he is. Oh, really, Booty Cheeks? You know what? I thought there was another guy that has similar name to you. I thought it was you and like one of your other names, and I was talking to him like it was you. He's probably like, "What's this guy talking about?" I thought it was you. So anyway, I saw that you got the video up. Oh, cool. Yeah, so the video is published then. Oh, I didn't even see that it was published. Cool. Yeah, see this they're very solid, these guys, man. They get things done. So yeah, so anyway, so that video is out, and now I'm doing the stream, so it's a little less stressful, right? Anyway, those guys straightened me out. They really helped me produce those videos in a much more efficient manner. So anyway, all right, so let's get started with the stream here. Again, I appreciate you guys taking the time to spend with me here. Hopefully we get more than like 2 people. Yeah, man. I don't know, man. I don't know why I do these streams. Like, I mean, the numbers are even lower than whatever. My other channel does better than this. So anyway, all right, let's just run through. I'm not going to sit here and complain for 2 hours like I like to do. Let's first go over the economic calendar. You can see it here, right? How nice is this? My economic calendar. Check that out. So anyway, starting with we have this Fed speaker series, right, which started today at 1:30 p.m. Waller and Bostic. I guess they had some stuff to say. I guess the market pulled back a bit since those guys spoke. So now, so forget that. That's priced in, whatever it was. I had no idea what they said. All right, let's talk about tomorrow, which is Tuesday. We have retail sales at 8:30 a.m. Eastern time. That's usually not like a major deal, right? You can see that here. Can I like highlight this somehow? I don't think I can. I don't have like my highlighter, whatever. All right, you can see my arrow pointing stuff out, right? I think you can see that. I can like highlight it like this, right? Yeah, I can do that. Okay. Anyway, so and then there's like this employment cost. Okay, who cares? That's nothing. Now on Wednesday, We have non-farm payrolls at 8:30 a.m. Eastern time. What is going on here with this? Non-farm payrolls at 8:30 on Wednesday? Come on, man. This is supposed to be the first Friday of every month. I understand the government closure, blah, 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 but that's no excuse, man. Like, come on. Non-farm payrolls on Wednesday? Like, that's just unacceptable. I'm going to have to like write a complaint or something because, really, like, they need to do this stuff on time. And what do we pay these people for? So anyway, but oh yeah, secretary. I don't know. I don't know what to tell you about that. But yeah, crispy gnome. Okay. Yeah. Not sure what you mean. Sometimes the humor goes over my head a bit, but it sounds funny. So I will trust that it's funny. So anyway, non-farm payrolls on Wednesday. Now this again, this is like the yeah, it's nonsense, man. Come on with this nonsense. So let me take that off the screen there. So why does it keep coming back up, man? All right, there we go. So anyway, so that's Wednesday, right? Which means this is typically the first. This is what we normally see the first Friday of every month. So that means Wednesday 8:30 we could get a wild move, right? So keep that in mind. We can also this also means volume will typically dry up going into that, like meaning tomorrow afternoon, going into non-farm payroll Wednesday. Come on, man. So anyway, so the unemployment rate, all that other stuff. Now on Thursday, we have the jobless claims or whatever in the home sales. That's not really as heavy weight. But then we have on Friday, CPI at 8:30 a.m. Now, I believe CPIs are normally like on a Tuesday, aren't they? But so we're getting two major data points this week. And also, and then there's consumer sentiment. I believe that's the Michigan consumer sentiment at 10 a.m. That doesn't carry as much weight, but still. So non-farm payrolls on Wednesday and CPI on Friday means we're going to get a lot of and this is we're going to get a lot of important data points which can shift sentiment. This is why I'm really highlighting this and really pointing this out because you need to be aware of these numbers. Can I make this bigger? I don't want to mess with this right now. I should have probably made it bigger before, but the point is this is going to affect sentiment just like Bitcoin had that massive sell-off basically from 95K, right? Once it rejected the 95K, and next thing you know we bottom out at 59. No one saw that coming exactly, right? Again, it's how sentiment changes, and suddenly like we have new pieces of information that no one was anticipating 2 months ago, like this guy Warsh. So let's talk about that a bit, right? If you have any questions about the economic calendar, let me know. But you guys should definitely like just make sure. Hey, Hamid, how are you? Good to see you. Um, Make sure that you guys each week prepare. I mean, that's why I'm doing this stream like this. But each week, you guys should prepare and just be aware of what economic events are coming out. Hey, Sean, how are you? Good to see you, Sean. Well, all right, boy. Sean from Seattle. I know they don't talk like that in Seattle. I'm just I know you laugh at that accent, my Texas accent. That's why I'm doing it. Anyway, good to see you, Sean. Right there. So let's take a look at this real quick. I want to talk about this Warsh guy. Okay, so if you're not familiar, Warsh is Kevin Warsh is the guy that was nominated to succeed Powell. So you know what that means? Hey, there you go. All right, Sean, Seahawks. Yeah, you must be happy today. You must be happy. All right, nice. So yeah, I'm not really a particular like fan. Like I mean, I saw only like the first half of the game, but that's cool. Nothing wrong with that. I'm not a Patriots fan either. So anyway, but so Warsh is the guy that was picked to succeed Powell, which means booty cheeks, no more Powell movements. I think we're gonna miss the Powell movements because this guy Warsh, he's bad for Bitcoin. So I want to point this out because I don't know how familiar you guys are with this. I'd really like to make this bigger. Can I make this bigger? I'm gonna try. Hold on. Let me see. I'm gonna try to make this bigger so you guys can kind of see this. All right. So um yeah, let me just shrink it just once. Hold on. Let me shrink it once so it's like all on one page. How about that? Okay, that's a little bit better. A little easier on the eye. So here's the thing, right? So I'm focusing on this paragraph up here. So Warsh is not Bitcoin friendly, and that's part of the reason. Besides the some of the other stuff that was been going on in the news, this guy is considered very hawkish. If you look at his history, I watched some video interviews of him, and his philosophy is nothing like Powell. And one of the key points of this guy is he believes that, unlike Powell, the Federal Reserve should step in only when the market requires, as opposed to Powell, who takes a more of a preventative. He has more of a preventative philosophy, meaning he prints money and he prints a lot of money, right? Like he was doing with his quantitative easing or whatever, or he was doing his expansion of the balance sheet, the Fed balance sheet, to basically avoid problems, right? So he throws money at it in advance, where Warsh believes, well, let the banks fail first, let all the problems occur, and then we'll decide on a case by case basis how much money we should throw at it, which means there's more of a chance of trouble. You know what I mean? So the market, that means we're going to see more pain where Powell likes to avoid the pain, right? Warsh, it was in the files. That's interesting. You know what? I had no idea. Boring game, to be fair. Oh yeah, I thought, Sean, I saw the first half. I was like I was trying to keep my eyes open. I was like, all right, this is probably, what is this? One of the most boring. That was my impression too. One of the most boring Super Bowls ever. I don't know. I mean, and we had no what's her name? Taylor Swift there. Trump, what was Trump? I don't think Trump was there either. There was no Trump, folks. No Trump at the Super Bowl. He was busy. But no Taylor Swift. I mean, come on, man. So now, all right. All right. So Warsh has that history. I had no idea. That's why we do this stream. Thank you for sharing that, Sean. That could be a problem with the Senate. That could be a problem because this guy has to be approved. So I just want to share my thinking of what I think of this guy, because he's bad for Bitcoin because of his view on how he wants to manage the balance sheet. And Bitcoin needs global liquidity, right? And this also has to do with the ISM number. I recently learned that the ISM manufacturing number is a proxy for global liquidity. And that's an important number for Bitcoin. The ISM number actually recently came out good. It came out expansionary, which is a positive for Bitcoin. But I guess we've had all these other negative things going on. Warsh's wife is the daughter. Oh, great. Oh, nice. Okay, so so see, we're getting all the information. All the conspiracy stuff is coming out on Warsh. That's good to know. That's good to know, Kai, because you know Gemini failed to tell me that piece of information. So, but anyway, so this is good to know. Now, my point is this: why would Trump nominate a guy who's going to be more defiant than Powell? Right? Powell, he had this big conflict with Powell, calling Powell stupid, all these other things. And he's going to pick a guy who's going to be more defiant or more hawkish. So I suspect that he may be into the rate cuts like Trump wants, but if he's into shrinking the balance sheet, that's like a counter effect, right? That means he's still taking money out of the system, especially on the global liquidity front. So I'm glad you bring this up about Mr. Powers. You know why I stopped saying Mr. Powers, my Dr. Evil impression? Because I got complaints. I got complaints by the guys they said, that's stupid, stop doing it. So I was like, okay, Mr. Powers, I shall stop. But I guess you're the only guy that liked it. But yeah, that's why I stopped doing it. I'll throw it in once in a while that you're suggesting that. I'll throw it. I'll say, hey, there's one guy that likes it, so I'm going to do it now once in a while. But yeah, they were like, it's cheesy, stop doing it. And I was like, all right. When we have like our feedback meetings, they give me feedback, and they tell me what they like and what they don't like. So anyway, that's why. So when you see changes on those videos, it's because I'm getting feedback and I have to make adjustments. So, and I had to make a massive adjustment as far as how I produce those videos. So anyway, Well, Sailor, Sean, no, Sailor. I don't care what they say. I'm still doing my Michael Sailor impressions. They're not going to stop me, Sean. I'm still going to do them, and that's that. So whenever I see Michael Sailor pop up, you'll still hear some Michael Sailor impressions. You'll still hear Frank Yen. I'm still doing Frank Yen and my Trump impressions. You're still going to hear that stuff. It's just some of the cheesier stuff you may not hear, like that. Hey, Izzy, how are you? Good to see you. Thanks for stopping by. All right, you guys. So, anyway, but I appreciate your feedback also counts. So, when you guys give me feedback, I really appreciate that. It's very helpful for me. All right. So, anyway, um, now I know Sean loves the Michael Saylor impressions. I love the Michael Saylor impressions too. I sound just like him, man. But anyway, so I also, if you notice, if you see here on this slide, I put this little blip, this little blurb about the 10-year note outlook, okay? Because we should always be aware of this without even having to show the chart. I just wanted to put the expectation, right? So look at this. This is also relative to the CPI data that we're expecting on Friday, right? So the thing is, and also when you combine this with Warsh, you kind of get sort of a bigger picture expectation. And that's why I put this in here. And this basically said that because of Warsh and all that, and this possible CPI, if there's a surprise to the upside, you may see upward pressure on the bond yield. And the bond yield, we'll take a look at the chart soon, but the yield has been going the wrong way. And I bring it up because you want to keep an eye on that yield. If that yield continues to rise, we're going to see problems. So just keep that in mind. And we're going into the Warsh era, and now we're going to have to see how this guy deals with that, because again, the Fed can't do much to control that rate. They're going to have to find other ways to do it. They can't do it by cutting interest rates, right? And this guy seems to be hawkish, and he wants to shrink the balance sheet. So it's going to be interesting how they manage all this. So I just wanted to point a few of those things out. I think that's all I had here on the slides. Yeah, those are the main things I had on the slides. All right, so now let's get rid of this here, and let's go to the charts. All right, let me know if you have any questions about this. Yeah, so we're gonna start. So speaking of, we had that bond market situation there. Let's start with the bond market, because I want to start with that first. We're gonna take a look at the ZN1, and we're gonna take a look at the bond prices first, right? And this is a 10-year note prices, not the yield. And let me change it to a daily time frame. And this is the daily time frame, right? Now, when prices go higher on this, the yield goes lower. So we had a bit of a spike here on the price, right? Over that was over the previous week, and which is actually a good thing, and it looks like it's trying to change the structure. So again, it's good to tie the fundamentals into what's happening on the technical side as well, because it gives you more perspective, and it helps you recognize what side you should lean on and how to measure your probabilities. We have a higher low over here, and it looks like we're starting to push into this resistance. This general trend, looking back, I mean, let's take a look at a weekly time frame. This general trend might be changing, right? Because this is the weekly. It's been generally bearish on the big picture. The more recent data has been more of a consolidation, as we can see, but we have a higher low forming. You see that? That little higher low could be a change. If that higher low stays intact and we start to push through this resistance, that's going to be a positive in general, right? That means, we're getting the rate cut effect, or we're getting more liquidity in the market, which should be good, because it means that the cost of money is going lower. That's theoretically what that means. Now, let's take a look at the yield. US 10Y, okay? This is the yield. Now, the yield isn't moving so dramatically. This is, we need to see this go lower. I mean, you can see it's a little red there. Let me make that big. I like to zoom out so that you have a kind of a bigger picture idea. But I mean, look at this. So we have support around this area. We have resistance up in this area on the yield. So this yield, as long as those bond prices continue higher, this yield should go lower. So if we see the yield breaking supports, remember that resistance area on the price chart? Well, that's basically the inverse of it right here. We start breaking below that, that's a positive for the market in general. Can we talk about how gold assets growth is not sustainable for the long term? Oh, okay. Gold assets growth is not sustainable. Okay. I'm not exactly sure what you mean by that. How gold growth is not sustainable. Well, gold moves many times for irrational reasons. Excuse me. Keep that in mind. So if there's some sort of geopolitical instability or something like that, gold is going to rise. If we have inflation or threats of inflation, gold is going to rise. And gold, as you can see, has been out of control, right? So if the bond market price rises and the yields sell off, that should still be a positive for gold. And that should be weak for the dollar, right? Because if the cost of money goes lower, that means we're getting liquidity in the market. We're getting we're getting more money in the market. And plus, if the Fed is cutting rates at the same time, that should create liquidity, right? Which also, we have a job market problem, right? With this, what was it, the JOLTS report and a couple, whatever, came out, the ADP report the week earlier came out very weak, like the weakest that they've ever seen, something like that. That prompts the Fed. The Fed is responsible for that, right? That's one of their part of their dual mandate. So that also prompts them to be cutting rates and to create liquidity for the market to try to stimulate the job growth. But with AI and all that other stuff, I don't know. It may not be the same this time. I don't know. I'm not an economist. That stuff gets complicated. But the point is, um, that job information is also going to have an effect on what the Fed does, their decision making, and that's why non-farm payrolls is going to be so important on Wednesday. All right, but anyway, all that aside, before you get confused with all that fundamental puzzle pieces, because they can be confusing, the bond market kind of gives clarity, right? And the bond market, as you can see, is really nowhere. It's just right in the middle of this range. So if the bond market, like I said, the yield starts breaking those lows, that means we're in the more inflationary type of environment. And gold, Bitcoin, and stocks should do okay. Maybe not blow to new highs, but there should generally be strength. We should not be seeing low after low after low. And Bitcoin has now a long way to go before it even gets back up to that 126 high. I suspect with Bitcoin, we're in the wave two. Now that we've cleared that 88K decisively, now you know what I was talking about. I suspect we're in the broad wave two, right? You guys know what I'm talking about. We've talked about that many times. We could look at an ETF chart, but I don't even have to show you the chart. If we're in a broad wave two, that opens up the possibility of 50K around there being the bottom of the range. And the top of the range may be 73K, it may be 80K, but we're likely to go into a range now, consolidation, and that consolidation may be prolonged. I suspect it could be similar to gold, where we may see a consolidation for a year or something like that. So it doesn't mean that Bitcoin's just going to keep going lower. It's just we're going to have a range low and we're going to have a range high. And we're at if we test range lows, you should be thinking about buying or investing, right? If we're testing range highs, you should probably be thinking about reducing risk, not putting on more. Does that make sense? Hamid, China buy gold over and over. So if you want to win economic situation, right? Well, China, China's a scam, folks. No, I know they cause problems with gold and silver. I understand. We're going to talk about those charts in a moment, but we can't go by what the news tells us all the time either, right? When it comes to stuff like that. But I know they have their their hands in that stuff. I saw it rising, and now it's becoming SW. What's SW? Oh, what is that SW? Is that a software thing? Is that software? Software titles? Um, Okay. Well, that makes sense. I mean, the stuff that AI is doing, like, I know people are very AI is a controversial thing, and they're saying it's not going to have the effect. It's over exaggerated, but I don't know, man. Some of this AI stuff, this technology that I've been working with, it's really wild. Like it, I believe that it's going to have some type of effect when it comes to efficiency and making things cheaper and changing how these businesses are operated, especially software where AI can do a lot of the code and it's only getting more advanced. So all right, anyway, let's move along. Let's take a look at the Nasdaq real quick. So we could do QQQ, all right? Because look, recent couple of recent week or whatever, we've had a lot of bearish stuff going on, right? A lot of bearish talk, people overreacting. It's complete nonsense because look at this. Does this chart really look bearish to you? I mean, come on, man. Like you have to be a moron to be bearish. It's bearish. It's not bearish. Look, that low was sustained and the general trend is clearly bullish. This is why you have to look at the bigger picture. You have to look at a weekly time frame of like the Qs. Look, this is not exactly bearish. If we're going to get bearish or at least get some sort of more prominent retrace, we need to break a support, which in this case would be like 595, 595 low. What is this low here? 580, right? This low, this absolute low that I'm pointing to here, I'll put a little arrow there. This is 580 over here on the Qs. So as long as we're maintaining that level, we're consolidating. And I don't see this, I don't see anything really bearish going on here. That's why these pullbacks are buying opportunities. And same with Bitcoin. The key is not getting too big too fast. Remember Coinbase? I've like tripled my Coinbase position during this sell off. This is why back in December, I only started with one share. I mean, I was even making fun of myself. I was like, one share, man, you got to put your little, you got to take your little girl pants off. You know what I mean? But I am glad I only had one share. Coinbase, that first purchase was around 250. Coinbase went to like what? 145 was the low. And I was able to buy more during that entire pullback confidently because it was painless for me. Okay, so let's say dollar index gets better. Okay, also good. The economy is looking good. How long will gold go? Okay, so all right, good question. Good question. We'll talk about that when we get into gold. We'll talk about that. Okay. Oh, I got you, Kai. So, SW needs software. Got you. Okay, so we'll get into those things, but I want to point out this Nasdaq is not bearish, right? So there's no all these people that are all this bearish sentiment. They're clowns. They're just looking for attention, and you have to think of a contrarian. You have to think like a contrarian, and most importantly, pay attention to the levels because this is really going to be your greatest guide, right? As long as this support maintains itself, we're looking at longs. Stocks are still poised to go higher. Maybe, with the NASDAQ 100, you're looking at the mainstream tech stocks, but they're poised to go higher. This is likely a range breakout situation. I mean, do you guys see that? You see what I'm talking about? The week before we got this doji long tail doji situation going on here. And look, this week so far we're starting out in the green. So again, we have those important items coming up this week. We have the non-farm payrolls and we have the CPI, which can change things. But if we're testing these lows again this week, you should be prompted for potential buying opportunity. If these prices break the level and close below, like Friday, we have a weak close, okay, there's your bearish argument, at least for some sort of more pronounced pullback. Does that make sense? And in that scenario, then you're looking for the next levels, right? You're looking for the next support level, which I suspect is going to be around here, all right, which is 570. Why? Because it's right in the middle of the consolidation. These consolidation midpoints serve as great support and resistance levels. Just look at the recent Bitcoin bounce at 59K, right? 59K happens to be right in the middle of one of these consolidations. All right, so anyway, that's not a coincidence. I love how Trump is calling 100K for, yeah, Yeah, you know he's a cheerleader, right? Like you have to take that like entertainment. Bitcoin's a scam, folks. Unless you want to pay me in Bitcoin, I'll accept it. Yeah, you can't. I know. I know. Like I know what you're saying. Just uh, you know, just take that with a grain of salt. That's right, folks. So let's go to All right, let's take a look at what do I want to jump to? Let's take a look at the dollar index real quick. Right now, the dollar index, keep in mind, the dollar index is the dollar against a basket of currencies, right? So it's not the dollar by itself, it's the dollar against the euro and all the other currencies, a bunch of what, the G7 or whatever currencies, right? So the dollar index typically should be inverse to bond prices, and it should look similar to the bond yields, right? If bond yields go lower, actually, no, reverse everything I just said. If bond yields go higher, dollars should be going higher. Because if the cost of borrowing money increases, then the value of the dollar increases because there's less supply of dollars, right? That's the idea. Now, bond yields have been rising, and we had a little push in the dollar. This is a daily time frame. We had a little bit of a push in the dollar, but the dollar doesn't look so great right now. And in general, the dollar has been weak while bond yields have been rising. That is not normal. That doesn't make sense with the typical expectation. So let's look at the weekly time frame on the dollar index, right? And I mean, look where we are. Let me get a rectangle tool just to make this a little clearer. We're messing around this support level, okay? And we seem to be rejecting it. This support level, this area goes back. Look, consolidation, right? Right inside here. That's not a coincidence. Also, going back further, look, a previous support. You see all that? See that? So this is a supportive area for the dollar. If the dollar manages to maintain it, especially in light of the reports we coming out that we have this week, right? Non-farm payrolls and CPI and whatever, uh, we get some dollar strength. I mean, look at the pin bar that developed over what, the week 2 weeks ago. If this manages to hold, then we're looking for a dollar to reverse. Oh, that was the wrong tool. Dollar to reverse and go back up this way. All right. Now, for that, we're going to need higher yields. I guess we're going to need a stronger economy. I don't know. I just don't see how all these moving parts are making sense. You buy a good blue T-shirt, bro. It's very. I mean, this is the same T-shirt I wear all the time. It's not new. Does it look new? Must be the lighting. I'm glad you like it. I'm glad I look cool. I usually don't get compliments. So, but it'd be nice, Ahmed, if I got compliments from the girls. You know what I'm saying? But I appreciate your compliment very much. Thank you. Thank you. So, anyway, yeah, next I got to get sunglasses, right? So, oh, by the way, booty cheeks, you know what? I thought of you. I forgot to tell you. When I was in Miami, I had a very interesting experience over there. And I can tell you, I have figured out where to get the girls for my car, my Instagram, my fake guru Instagram campaign. I figured out. I know now where I'm going to get the girls. Okay? And the car is easy. You could just rent one of those. But the girl was the tricky part. I now know where to get the girls. So little by little, I'm putting the puzzle pieces together. So just keep that in mind. I'm still working on that. All right. So let's move along here. And so you guys understand what the dollar index. Watch this relative to the bond market. You should be watching the 10-year note, right? The 10-year note futures, the 10-year note yield, which is the same thing, just inverse of each other, relative to the bond market. And you should also be watching gold. You should be watching oil, and you should be watching Bitcoin. So this is what the dollar looks like. We are in bounce territory. Do we bounce? I don't know. It's up to the market. If we bounce, there's going to have to be some sort of economic driver behind that. There's going to have to be some sort of catalyst. This theoretically does not look good because we have the lower high over here. It doesn't look good theoretically, it should make the lower low, and fundamentals seem to support that idea. Does that make sense? So let's now move along. Let's take a look at, all right, that was a dollar. Let's take a look at gold, okay, XAU, because gold is just out of control. In fact, all the prop firms and all like a whole bunch of prop firms banned or limited gold and silver on their platforms. I guess because people are making money. That's the only reason why they're going to limit. They say, well, we don't want to take the risk. That's complete nonsense. Whenever a prop firm comes out and they limit something, it's because they're losing, which means traders are winning. That's usually what that means. So it looks so clean and shiny this time. Man, yeah, I don't know. I don't know, Hamid. Maybe, yeah, I don't know. Maybe it's the lighting. Hey, look who's here. Look who's here. Alex from Romania. I haven't said Romania in a long time. Romania. I got to walk away from the microphone. I don't want to blow your ears out. Romania. I miss Romania. So good to see you from Romania. All right. Yeah. I thought, my God, where's Alex from Romania? All right, I'm losing my voice. All right, so let's take a look at gold. Now, gold, like I said, gold is still on fire. I mean, look at this, man. Look at this. Romania. I need, you know what? I need like a Roman, like a shield and like a helmet or something, and like maybe like yeah. So I could look more like Roman. You know what I mean? And I could say Romania. That would make a lot more sense. Anyway, so yeah. So look at this high or low on gold, right? I mean, just look at the coincidence, guys. This is not a coincidence. Like when you're active in these markets, if you're looking at this is excellent for options too. If you trade options, this is excellent. If you're monitoring these levels, look at this previous high. This is not random. Look at the previous high, right? 43.80. Look at the consolidation zone over here. This is a weekly time frame. And then look at the bottom of the pin bar from 2 weeks ago when gold was getting hammered and it was, hey, gold is going to zero. Gold's not going to zero. So these levels give you high probability turning points. Now, how you manage the risk or how you get involved in something like that, of course, it's easier to see after the fact. But the point is this: you can prepare yourself in advance for such levels. And when you see a reversal, perhaps on a smaller time frame, which is, by the way, that's how I'm looking for trades for Ethereum and all that other stuff in the Telegram channel. When you get those confirmations on the smaller time frames, you can get some really good prices. I mean, that bottom on gold was what, 44.02, and we're back at 49. Like, that's 900 points, man. Like, that's enormous. So, just keep that in mind. That's why it's so important to go over these levels on your own charts and notate them. Maybe set notifications there so that you're aware, because clearly it wasn't there for long. Now, so there's a higher low. We're likely to push back and potentially test this high area. It's within reason. Now, do we make higher highs? I don't know. So, we had a question here about gold and all that other stuff. I mean, if we have to see how things change, we can't tell from a chart where gold is going to be in the future. All we can do is assess risk and define opportunities. So right now, these are your key levels on gold. Okay, the gold high, which is what, 56.02, right? And you have a massive pin bar into that area, and those are all-time highs. That's going to be a higher risk area. So if you're taking day trades, you want to be aware of that. If you're long gold and we retest those areas, might be a good idea to unload some of that gold, take profits, because it's possible that we see a failed high. As far as sustainability, I mean, it's going to depend on the inflationary effect. How hawkish is Warsh going to be? Very hawkish. Is he going to bolster the value of the dollar? Right now, based on these charts, the dollar looks bearish, and that still makes a strong bullish argument for gold and silver, right? So keep that in mind. This is all a function of the money supply, the global money supply especially. So keep an eye on M2. Keep an eye on that ISM manufacturing. Are you guys familiar with that? Kai, are you familiar with that? That's something, Kai, you probably be familiar with. I learned that ISM manufacturing is a proxy for global liquidity. How do you guys feel about that? Do you agree with that? I mean, I just learned that. Um, and that's important for Bitcoin and the altcoins. That's important. So, because if global liquidity is shrinking, then you could forget about altcoin season and all the other nonsense. We need an inflationary environment for these coins and gold and the stock market to continue higher. Okay. So, right. So, I mean, I just learned that. Oh, yeah. So, yeah, right. Yeah, I agree. Alex. So we're going to talk about that. In fact, I've been buying more coin. And also I've been buying IWM. I've been buying the Russell because of its relative strength. I've been buying option spreads. So we'll talk about that here as well. Not just top line figure. I use it not just to get macro view, but also. Oh, really? Oh, that's interesting, Kai. Kai is referring to the ISM number. I had, I was not so familiar with the relevance of that number, and I just learned that recently. So that's very good to know. So guys, this is why we learn together. Pay attention to that, right? Because that could be a source of broader economic catalyst. You need to be aware of the catalysts to justify price patterns or price confirmations when you're taking trades or investments, right? Especially for bigger picture. If you day trade, it doesn't matter so much, but the bigger picture, it matters, right? So anyway, gold has not changed, and not yet. Now maybe we get the failed high on gold, right? Maybe we get a double top. Maybe gold consolidates from here, and maybe we have our high at 56 and our low at whatever 40, whatever, and maybe we consolidate in this zone. If that's the case going forward, watch this area, these old highs, this old resistance area for new longs, okay, on gold. Watch that range low right there. Look for failed lows, look for double bottoms, look for that kind of thing. And you want to make sure that the fundamentals still support that idea. And at this moment, they still do. All right, let's jump over. Let's take a look at, let's do oil real quick. Oil, CL1. Okay, real quick. I'm not going to spend a lot of time on oil, but oil was tricky with that Venezuela situation, and since then, oil has been working its way higher. Now, you guys remember months ago we talked about this area on oil. Remember? And I was saying, I mean, I'm not a big guy into oil, but oil looks like a long, or at least it's a place not to go short. Remember that? I think I asked you about them a few months back. About what? ISM? Maybe you have. I don't remember. I don't remember, Alex. From Romania. I don't remember. Maybe you have. But the stocks. I know the stocks you've been talking about. I know you talked about Hood and you talked about Coinbase and what was the other one you mentioned? Let me just go back to your chat there. The other one was Neo. Yeah. So yeah. Right. Yeah. So in oil, again, even though, we had that situation with Venezuela where I suspected, oil was going to go lower initially, and then everyone came in and corrected me and said, no, they're not going to extract all that oil. It's too expensive. I remember like Sean and all that. They all corrected me from the software, but was okay. Right. And oil, the technical signs of oil were there. And we talked about this. And we have like a triple bottom. So that's why it does pay to combine, right? And pay attention to those technical signs, right? Oil was in a bad place to be shorting. And we were very clear about that here. And like I said, if you're going to short it at resistance levels, not at this support level. Right? All it takes is some piece of news or something. I mean, we've been rallying ever since. This is a weekly time frame, right? And while we rejected this resistance initially, great for day trades, this is not really rejecting, right? And remember, oil is a major component. Energy is a major component of the S&P. It takes up like 30%. So if this continues to rally, that's going to be good for the S&P, right? So, oh, nice, Kai, nice. So, can you take a look at him and hers ticker HIMS? Okay, okay, sure, sure. Yeah, yeah. Thanks. Well, I'll take a look at that. Let me get through a couple more of these charts, and then we'll start jumping around to your requests. So, what was this over here? Okay, so is at least probably ISM, right? Right, M2 as well. So you guys following me on this, right? So look, oil looks bullish. Look for higher lows on oil. I mean, we have a higher low developing on the weekly over here, right? For swing trades. Look at the support right now for oil is around here. $61. You could round that to $60 on oil. If oil retests that area or the low 60s, I mean, right now we're at what, 64, almost 65. If this thing is testing the lower 60s, there could be an opportunity there. You could use like the USO or maybe some energy companies to play oil, right? You don't have to do oil futures. And you have resistance levels up where? Maybe up around that 70 level. This is probably around 70. Yeah, 69, half, 70 area, right? So watch that over the next few weeks. Okay, so let's move along here. What was that, Hamid? All undervalued right now, and gold price is so high. Well, okay. So if you have money, which one? Don't chase gold. Okay, like don't chase gold. If you're looking to invest in stuff, I think there's some opportunities in some of the altcoins, right? I think there's some opportunities there, but you don't want to go hard. You don't want to go heavy. You want to go light because we don't have any confirmations yet. Bitcoin is at good prices for investment, right? Things like, I like Link because Link is an infrastructure play. There's a couple of other ones, but XRP, right? Those are like institutional type of plays rather than, something like PP coin, So if you're going to pick like an altcoin, make sure they have good use cases and stuff like that. But now is the time to start going in lightly. So like on that note, here's what I want to do. Let's take a look at Coinbase because this is how I'm investing in Bitcoin, right? So instead of buying Bitcoin outright, I'm using Coinbase as a proxy. You guys know that. We've talked about this, for a while. Now, Coinbase got hammered. Same with, you see MicroStrategy? MicroStrategy was almost at $100. It was at like 104, right? And then the next day it was back to like 130, right? I mean, that was a huge opportunity. XRP is a fraud. Well, you know what I'm saying? Like, I don't have any XRP, but you know what I'm saying? Like, the more of the institutional type of plays, XRP is not the only one. There are other ones, right? Ondo, I don't know all of them. But the way I'm doing is I don't have any altcoins. The one that I like the most is Link for fundamental reasons, Chainlink. But, there are other ones. I have to do more homework on that. But what I'm doing is I'm investing in Coinbase because I'm using it as a proxy. Like it's either this or MicroStrategy. But, I always make fun of Michael Saylor and I'm like, I'm not going to buy MicroStrategy. So I'd rather buy Coinbase. You see their cheesy Super Bowl commercial for Coinbase? I was like, what genius came up with that idea? You see that, Sean? You see that ridiculous commercial for Coinbase? It was like a karaoke thing with a blue screen. I'm like, with the billions and trillions and billions of dollars that Brian Armstrong has, you mean to tell me, like, what marketing genius came up with that? I know, let's do a karaoke thing because it's so ironic. Come on, man. The best one, the best Super Bowl commercial that I remember was the FTX one with Larry David. That was funny. That whoever came up with that one, that was genius. Okay, not this nonsense. I don't know, man. People are out of their mind. They're smoking too much. No, maybe they need to smoke more pot because their creativity is in the toilet, man. There was nothing creative about that commercial. It was nonsense. All right. Anyway, yeah, I don't know what that commercial was all about. But anyway, so let's talk about Coinbase. Remember, they have a very strong voice in the Clarity Act. Like Brian Armstrong, if he doesn't like something in the Clarity Act, he's like, we're gonna have to redline this, and we're gonna have to like, who is this guy, man? Like obviously he has a lot to say. So anyway, I'm using Coinbase as a proxy for Bitcoin. I don't particularly like Coinbase. I think their fee structure is horrendous. I think their customer relationship management is horrible. Okay, but I'm not looking at those factors. I'm looking at their as a proxy for Bitcoin because it moves similar to Bitcoin. So Bitcoin got hammered and Coinbase got hammered, as you suspect. Now, I started buying one share at a time. Remember, Hamid, you were making fun of me? You're like, oh, bro, you got to take some risk. Well, if I had bought like, a few hundred shares at 250, I would be a little uncomfortable right now, but I'm not. So now I have like 9 shares. Okay. I bought a whole bunch more. I tripled my position or whatever. Right. I was carrying 3 shares for a while. And now I have 9 shares from like an average price of, I think, like 190 something. And I'm looking to buy more. Okay. But my goal now is to buy more on the way up. I'm not going to keep buying as it pulls back. Right. So I'm slowly accumulating a Coinbase position. I'd like to have maybe 20 shares, 30 shares. I'm not going to go nuts. I'm not going to do like hundreds of shares, but I want to build a Coinbase position as an investment. And these are excellent prices for that, right? I mean, this is the weekly time frame. So, I mean, look, I am definitely not buying highs. I'm accumulating near lows. And the lowest point so far was like 140, 144. And I missed that price on that day. But you know what? Next pullback, I'll put an order below the market because I don't think we're going to bounce in a straight line. I don't think we're going to do this, right? We'll probably fool around a bit. I'm going to try to accumulate some more shares, right? So that's what I'm doing with Coinbase. And like I said, I'm looking to maybe have 20 shares, maybe 30 shares, and I'm buying 1 or 2 at a time. That's what I'm doing. And I want better prices. So, but in this case, I'd like to buy some on the way up. Okay. Makes sense. So, okay, Kai, cool, good to know. Robinhood is reporting tomorrow. So, and Robinhood is a proxy as well, right? Robinhood, in fact, Robinhood was the best looking chart. Oh, you like Link too? Cool. Yeah, Robinhood was the best looking chart of all of the charts that we looked at. We've looked at Robinhood before. So, Robinhood, I mean, look, this is a nice pullback on Robinhood. But this is still a better looking chart than Coinbase. It's definitely a better looking chart than MicroStrategy. And, they all got beat up because of Bitcoin. But look at this, right? Look where Hood is trying to find support. So if they have a bad report tomorrow, or if they pull an AMD, remember AMD had the report like a few days ago? That was the start of all this mess. And their guidance was bad. If Robinhood does something similar, maybe you'll see some lower prices. I think it's a great time to pick up some Robinhood for investment. I mean, look at this. So a good reference point for Robinhood is around $66. The lowest point was what, $71? Right now we're at $86. Look, this is a great choice for options as well. You could buy options out of the money 6 months out. 3 months, 3 to 6, like 90 days to 180 days out. You could buy deep out of the money options, but not just the calls. You do the option spread. So, like for example, the $100, June call, sell the 100, buy the 100, sell the 110, right? And you're going to get a cheaper price on that. And that's exactly what I'm doing with the Russell 2000. Okay, I'm accumulating a position with vertical spreads, right? So I'll show you that here in a moment. They're reporting today, Kai. Okay, cool. All right. That's wait, no, hold on. No, that was, I think you said tomorrow. Okay, no, tomorrow. Got it. Do you remember I was happened? Average buy price. Can we see Sailor in jail? You're never going to see me in jail, Hamid, because I can afford to get out of jail very easily. I have trillions and billions of dollars, so I will never go to jail. You're going to go to jail before I go to jail. It's not even my money. No, but, you, yeah, look, MicroStrategy is just a higher beta version of Bitcoin. They're all Hood, Coinbase, MicroStrategy. I'm sure we could think of some other ones, are all proxies, but the betas are not the same. That's why, I mean, you could have gotten MicroStrategy at 104, right? You could have gotten Coinbase at 144. I prefer Coinbase because it has a lower beta. Yeah, so I like buy your coins based on DCA. Right. Yes, Hamid. Now is the time to be doing that. I agree. I'm not that bullshit. Certainly prices to buy are for true believers who are in it for the long play or short-term traders. Right. So Kai, I understand where you're coming from. Like in these situations, you got to take your long term. If you're going to go for long term, now is the time because you don't see these type of pullbacks. These are like once every 4-year cycle type of pullbacks, right? You don't see pullbacks this steep. It's like a presidential cycle type of thing. So that's why when they come, you got to buy something. You don't have to go all in, but it's not a bad idea to do something. And that's why, like for example, here let me show you IWM because this is another position I'm developing. So IWM is just there's nothing really bearish about this thing. So I picked up some on this pullback. When everyone was pooping in their pants a week ago, I put out orders and I got filled on some spreads. I only have a few. I'm trying to buy more. I'm trying to build a much bigger position in this because of its relative strength, right? So I have, what was it? I can't remember the prices now. The 180, what is this thing? 266? No, I think it was the 280, 290 call spread, right? Buying 280, selling 290. And I was looking at like March 31st or something like that. Like I think 50 days out. But what I'm doing is if price can't pull back and give me better prices, I'm going to start pushing the time out further. Like, I'm going to go into April and I'm going to go into May and I'm going to accumulate a position that has multiple timestamps on it. I'm not going to do it all at one. I'm not going to do it all at the same time. Does that make sense? So yeah, I like the IWM. Now again, these are small caps. They're dependent on cheap money. And right now the bond market's going the wrong way. So this is not exactly, this is not exactly the best prices for this, but the relative strength is just you can't argue with that. So if we go into the cheaper money environment, right, and Warsh is he's a washout. If Warsh is a Trojan horse, and he's basically going to be an agreement, he's going to be a yes man for Trump, and we're going to go into a higher liquidity environment, then this thing is poised to just keep going, right? So any type of pullback, I want to start accumulating call spreads. That's how I'm doing it. Instead of just buying 100 shares at a time or whatever, I'd rather do it with call spreads. They're much lower risk, right? And if I'm wrong, I'm not going to lose tons of money. But if I'm right, I'll do okay. I'll make out nice on that. So that's what I like about that. Sailor don't go to jail. He's a genius. That's right, Hamid. I am so glad. I hope you're buying some of my MicroStrategy. I sense many great. Yeah. Oh yeah. I'm trying to figure out some Warsh jokes, but with that name. So but anyway, so that's what I'm looking at with this. So this is all dependent on how the macro unfolds over the coming months. So we have to pay attention to the non-farm payrolls. We have to pay attention to the FOMC meetings. And now that Powell's going to throw in the towel, Warsh, comments from Warsh, if he has an interview somewhere, even though he is not the Fed chairman yet, not officially, what he says will move the market. Okay. So, and apparently there's some conspiracy theories behind him too. So we have to see what his choices are. But his philosophy doesn't look so market friendly, which means I don't think he's going to throw us into a bear market, but he could lead to some unexpected pullbacks, which will create buying opportunities. Because as long as these structures stay intact, I mean, look at this thing. Right? There's nothing bearish about this. So IWM wants to be in strong bull mode. Great. I'm all for it. Let's go. So watch for the higher lows. Watch for any tests of old resistance, new support. And that should give you your answer. don't be scared just because, everyone on TikTok, can't keep their pants on. You know what I mean? They're pooping their pants. Don't pay attention to these morons. I see one moron after another, all saying the same garbage. Don't pay attention, to these people. Pay attention to the levels, because that's where you're going to get your true insight. And that's where you're going to be able to measure your risk from. And that's what it's all about. And you decide, can you take the risk? Yes or no? And then that's where your position is going to come from. So um, yeah. So IWM lifted by the Fed manipulating the short. Oh, right. And that could be because, right, they're cutting the rates. And even though the next rate cut for the next meeting doesn't look good right now, the probability is like what, 25% or something. So we have those rate cuts taking effect, the previous ones, right? That's going to have the positive effect in the IWM, because these small caps depend on cheap money. But if we have a lousy labor market, which we do, and the Fed is forced to continue to cut or that sort of thing, I mean, that's likely going to lead to higher IWM prices, because I mean, and the relative strength is just, you can't deny this. Like, you can't argue with this thing. So that's why I'm trying to build more of a position in IWM. Again, I'm not going nuts, but I would like to have like a decent sized position. And as this thing continues, like I said, I'm going to keep putting on like further out, like May, June, that kind of thing, until this thing really gives a sign of like, like a lower high. Like when I see something like this, a lower high develop, then I'm going to stop, right? And I also intend to take profits along the way. So that's my plan there. The Fed is buying short dated bonds, what so many call not QE. Oh, sure. They're buying bonds, what so many called not quantitative easing. That lifts IW. Oh, that's interesting to know, Kai. That's interesting to know. I guess because they're injecting liquidity onto the short maturities, and these companies depend on they borrow a lot of money. So it's going to affect them probably the most. And they have that thing called the January effect. And if the IWM finishes out the month strong, then that sort of gives you an idea for the general market. It sets the tone, for the broader market. You guys hear that January effect? You can Google that. So anyway, so that's where I'm at with that. Now there was a guy, he asked about what was it? Hold on, it was he, she, or let me go back to his question here. Where is that? Hold on, it was him, her, him and her. Let me go back. I want to answer that one. Anyone else have any questions? Want me to check anything real quick? Kai, if you put something, I forgot. Hymns, that's it. Hymns. Let me go back to hymns. Let me know now, because I'll be wrapping this up here in a moment. How long have I been talking? Yeah, be wrapping this up here in a moment. Here's hymns. What is him and hers health? Great. Man, this thing don't look good, man. Let's see. What's going on here? Ah, all right. Yeah. So look at this gap, right? Look at that. This thing is clearly getting hammered. This is, if you're thinking about buying this while it's in a good location, it's too early. So let's take a look at some of the structure around here, right? Look, you have old resistance, new support. You're right in there right now. You have order blocks all over the place, right? Like, look, you have like an order block like over here. I mean, there's so many, like you can't even note them all. Look, you have like an order block situation right in here. There's a lot of overlap. I mean, look at that. So it's in a good location, but there's no stability here. So in a situation like this would be good for like, if you're looking to buy small shares, maybe one at a time or something, because this thing is poised to go lower based on this momentum. What you want to see is stability develop. So you want to see some consolidation. You want to see something that looks like this over here, right? You want to see something like this develop, some flattening out of the price, some sort of consolidation. After a straight line like this, you want to see some sort of stability, something. It needs time to stabilize. So if you're looking to get into this thing now, don't be in a hurry if you're thinking long. As far as shorts go, maybe for day trades and stuff, but I wouldn't be in a hurry to short this either because you're at high risk levels for shorts, right? So I don't know what you're thinking, long or short for this, but if you're thinking long, I mean, I would be thinking long. I don't know what their fundamentals are, but I would be looking for stability at least. Or if you're going to step into it, step in small, where it won't hurt you. One share at a time. Like I was doing with Coinbase. Someone is coming after their revenue stream legally. Oh, really? Okay, Novo. Oh, Novo is sued. Oh, okay. Oh, Novo sued them? Oh, interesting. Okay. Interesting. Well, so that's a legal battle. Yeah, I wouldn't touch this thing. Or unless you get extreme prices and you want to take some small, very small bites. But if it's getting hammered like that, that's going to be up to like a judge. And there's going to be insiders that know everything that's going on in that one. So Trump is a genius too. What's he saying here? After you start, before you make the world and buy a lot. Yeah, well, Trump has his own agenda, and he clearly likes to make money, and he likes to use the markets in his own way. That's right, folks. The market's a scam, but if you want to pay your rent in Bitcoin, I'll take it. So yeah, got to be careful with him. So that's why, look, don't get wrapped up in the conspiracy theories. Look at the general fundamental things, right? Pay attention to things like non-farm payrolls. Whether you agree with non-farm payrolls or not, everyone else does, right? The market trades on it. So pay attention to that. Pay attention to the CPI report. And most importantly, pay attention to the Fed and the bond market, because that's really where the game begins, right? I mean, a lot of my insight comes from how the Fed shapes perception, what the Fed says, because you have to also read between the lines. A few months ago, Powell was saying, oh, yeah, we're going to print money all over the place. And then he comes out and says, oh, no, I changed my mind, right? And now you have this Warsh, right? And now he's coming out and he's like, yeah, I don't believe in printing money, right? So that makes things a mess. So you have to adjust to all that. That's why charts cannot tell us the future. Charts can tell us what our risk is and what our potential reward is. And charts can help us confirm structure that's aligning with fundamentals, right? It's nice especially for bigger picture. That's where a chart could be helpful. Also, if you day trade, charts can give you a lot more insight into where the market's going in the next hour, right? Where fundamentals aren't going to really help you with that. So I think they stole from Novo. Sorry. Oh, okay. No, that's good to know. Good to know. We should go back to the gold standard. Yeah, a lot of rich people would no longer be rich if that was the case, right? We have this immense wealth because it's all fake. It's all fake money, right? That's why if we were on the gold standard, we wouldn't have these multi-bazillion trillionaires that we have. So anyway, yeah, people I think are very happy off the gold standard. If you're Jeff Bezos. So anyway, all right, guys. So good stuff there. And let's just go to GBTC. Let's just go to the Grayscale ETF. So this is a great proxy for Bitcoin. Like I said, if you want to see all the Bitcoin details and the Ethereum details, make sure you guys are in my Telegram channel. I'm just curious, how many of you guys are in my Telegram channel? Is anyone here in there? If you're not in there, use the QR code. Go in there. You're missing stuff. Elon is worth 10 times. He could buy your country. Yeah. So that's because we're not on the gold standard, right? So things would be a lot more, I guess you could say, equal, right? The equality gap would be much smaller if we were on the gold standard. But anyway, so this is the Grayscale ETF on Bitcoin. And just pay attention to where we are, because again, this is like Alex was saying too, these are the investment levels now. Remember I said before Bitcoin found that 59K support? Look, right? Remember I said it was in the middle of a consolidation? Look, this is not coincidence. So it really pays to pay attention to the bigger picture. Yeah, we rejected 95K and we got here in a hurry, but imagine, people, remember all the nonsense up here? Remember? Michael said, Bitcoin is going to be at 10 trillion by this time next year. I can almost guarantee it. Remember that nonsense? Why wasn't anyone saying Bitcoin is going to touch 59K? Right? It would have been nice if someone could have told us that. Now, remember, guys, I was telling you guys, be careful up here. The risk is high. Remember? The risk is high. So, and remember, I also talked about how this could be a potential wave two. Remember that? And remember, at 88K, I said this is like the key area where the market decides. Well, we messed around 88K for quite some time, and then we decisively blew through it, right? And that now, this is wave two, right? This is wave two of the bigger picture. And wave two theoretically can correct 100%, but I doubt we're going to see 100% correction. But wave two can we can revisit 50K. So keep that in mind. Wave two is likely to be a consolidation. It's not a bearish trend. Wave twos and wave fours are corrective structures, but they may have bearish legs in them, and some people may overreact and call them bear markets or bearish trends. But really, if you spread it out, they're more like consolidations, right? So we look at the monthly chart. I don't think the monthly chart's gonna be limited. This is a monthly chart, right? So, and on my most recent video, I have a similar chart to this. This is a higher low. So if this entire structure on the monthly chart is wave one, this is wave two. That's what I'm looking at as wave two. And wave two can go much lower. So just keep that in mind, people. Okay. Well, you see the head, and yeah, I see what you're looking at, right? You have the head, you have a shoulder over here, possibly, or this could be a shoulder. And now we're looking for the bounce back up and another shoulder. That all could be part of wave two. And the wave two bottom, could be anywhere, like in this area, right? Wave two bottom could be there somewhere. That's like 50K. So the goal, the idea is not to try to pick the bottom. The idea is try to find lower risk levels, right? And recognize how much lower the market can go. So we're always measuring risk. Okay. So right now, our risk, even though we touched 59K, this party may continue and we may test 50K. It's possible. We can't forecast it. We can't say that that's going to happen, but it's a possibility now. So with that in mind, you should be able to measure your risk. And you should say, okay, if that's a possibility and we're not on our way back up yet, if I'm going to be investing, if I'm going to be buying Link, if I'm going to be buying altcoins, like Hamid, you want to buy some altcoins, keep in mind, there's plenty of room to get better prices, which means you don't aggressively buy right now. That's what that means, right? So you do a little at a time. Why do you think I'm buying one share of Coinbase at a time? I'm buying one share because I'm not exactly confident with this situation. We're not in a bullish structure right now. This momentum is not bullish. Okay, so if I'm going to buy during this pullback as we go lower, I have to keep in mind that the market can go lower. Why are you bullish? What's the bear market for you? Why are you that bullish? Well, first of all, I'm bullish. I'm generally bullish on Bitcoin and all that because look at the fundamentals. Look at all the investment going into it. Look at all the institutional participation, which we lacked 10 years ago, right? There's a lot more money going into this, and there's more of a future for the ones that have use cases. You can't be bearish on something like this when all this money is pouring in, like it is, and you have like AI and you have all this other stuff going in. I mean, Bitcoin is bullish, but well, no, short term is another story. Short term changes. This structure right here is a bearish momentum structure, but we have not broken this support, okay? And this thing can easily stabilize somewhere in here and then form the next leg. Now, keep in mind, if this is a wave two pullback of the entire structure, right? The next wave is wave three, which again, wave three, we're looking at that could take a couple of years to get to. But wave three, as we know, wave threes look like this. Wave threes look like this. So that's where Bitcoin could go to 200K or whatever. Just think about gold, right? When gold was at 1,000 and gold broke 1,000, people said gold is going to be 5,000. No one believed that, and we're at 5,000 today. So Bitcoin is in that same type of situation, and if we have an inflationary future, which is what it looks like right now, unless we have a real hawk come in and they say, hey, you know what, we're going to raise interest rates now and we're going to have 9% interest or something like that, then yeah, the Bitcoin party is over. But if we keep printing money and the government keeps doing what they're doing, I don't see how Bitcoin, I just don't see the long-term bearish argument. Short-term, yeah, we can still test some lower prices, but I'm looking to accumulate because this is when you buy it, when it's on sale. You don't buy to invest. You don't do it up here. That's where all the risk is, okay? Now all the morons are getting banged out of their positions. This is where you accumulate for the long term. Now, okay? When things look horrible, when everyone is bearish. Now, there's institution, but there is no liquidity and everyone is buying OTC. Right, okay. But what does that mean though? Are institutions really buying? Or are they buying for the affluent boomer clients who want leverage? I mean, I don't know what the institutions are actually doing, but I'm just talking about their general participation. I can't answer that question. Are they really buying? I don't know. I don't know Larry Fink, and he probably wouldn't tell me anyway, what he was really doing, because he probably wouldn't like me. He probably wouldn't want to spend time with a guy like me. But you know what I'm saying? Like, there may be a lot of propaganda with that because they always try to suck in retail. Oh, the institutions are buying. We should buy too. Obviously, someone is selling because we had this move, right? So I'm not a big believer in what the news tells us, but I do believe in levels, and I do believe in like interest rates and inflation and economic forces, right? That's really what I'm basing ideas on. But if there is all this institutional involvement in general, right? Just generally speaking, I don't see how this thing is going to go to zero. Like I just don't see the bearish argument there when there's all of this general participation, all this money pouring into AI and all that other stuff. I mean, that's all going to have an effect on this, right? And all that Web3 stuff, don't lose sight of that. It's the technology of the future. I mean, there's going to be a lot more efficiency. There's a lot of wild things going on in the Web3 space. A lot of it's nonsense, just like in the .com era. Look, it's the same idea, but there's also going to be some strong use cases as well. And if there's going to be opportunity for growth, where else is it going to be? I mean, maybe something else comes along, but right now, I think there's still a lot of growth opportunity in this space. So don't lose sight of that. Now, again, you don't pour everything you have into this, but these pullbacks at this magnitude are not common. They're not frequent. So when they come along, you have to see them as an opportunity, right? Just like when your favorite food goes on sale. Okay. Um, let's see. So let me just look at some of the comments on here, and I'll wrap this up here in a moment. So, okay. So hold on. I'm just trying to catch up here on the comments. There are much bigger fish to fry. Okay. AI, space, geopolitics. Okay. Well, sure. Look, there are other areas, right, to put money. But I think, first of all, I think AI and this space, I think there's some correlation there, right? I mean, I know AI is its own thing, but I believe that there's some they're going to have an effect on each other. Especially with the use of tokens for some of this AI processes and all this other stuff and all this agentic stuff and all this other stuff. I think there's some overlap there. So I think Bitcoin benefits from that. Maybe not Bitcoin itself, but certain altcoins, and stuff like that. Versus an asset that's out of favor for 5 years straight outside of Bitcoin. Right. So those liquidity, okay. Yeah, so again, look, you just have to look at the bigger picture and all that with counterparty risk through the roof. Right, right. Well, you have to look. There's going to be a lot of these things that that are just garbage, right? Like, and I think, well, it's a function of liquidity and a function of low interest rates. If we go into a lower interest rate environment again, like where we see that 10-year yield really come off and we're in the cheap money, what do you think is poised to rally? It's likely to be these high risk assets, right? And Bitcoin is the leader of them. So that's why it's really a play on that. I think sort of like gold, you know. If I look at then they should both go up. That was a narrative pushed for 5 years straight by the bros and correlated to S&P since bear has. Okay. Yeah, so I'm not following all that. I'm not sure what you mean by all that. Um yeah, so long term, 5 years out, 10 years out. That's what I'm talking about long term. Investing long term, right? And so when you get these bearish cycles that we're seeing right now, don't lose sight of investment opportunity. Like I said, Bitcoin and the altcoins, these are high risk, right? Because some stocks also enter these bear cycles. And that's when you want to pick up high value stocks like Google or whoever, right? But we looked at the NASDAQ before. The NASDAQ is not in one of those situations. We don't have a situation like that in the NASDAQ. So when you see one of these situations, just it's an opportunity to pick up something, but you don't put 100% of your portfolio. You do like 10 or 15%, something like that. And again, I can't give you investment advice, but you have to be, careful. These things, your bearish arguments may be correct, and Bitcoin may go to zero. I don't know. Michael Saylor may be going to jail, like Hammond said. I don't know, but these are, wherever there's higher risk, there is greater opportunity. So when you want opportunities, you got to take some risks sometimes, but I would not go all in. Let's make that clear. I would not go all in on these. Like I said, I'm accumulating Coinbase as a proxy. I like Coinbase for those reasons, right? Plus Coinbase has its own business, whatever, right? That's how I want to participate without having to buy Bitcoin outright. Okay. Right. So Kai, and I agree that there may be that's why we talk about these, we debate these points, because I don't know everything. I mean, I'm in the same boat with you guys. If I had inside information, then maybe I'd be better off. But I have to guess too, and I have to take risks, and I have to figure out what kind of risks I'm willing to take. Do I recognize certain opportunities? Because look, I can tell you back in 2008, I remember when things really got really ugly, there were people out there that had the courage to step in. They stepped in big and it worked out for them. Now, of course, we were talking about stocks, banking stocks. I remember what was a Bank of America you could have gotten for like $1 or something like that. And most people back then were completely pooping in their pants. They were scared. The stock market was going to zero. And there were people out there that said, you know what? The Fed, the US government is not going to let the stock market go to zero. And they stepped in, and boy, had it paid off for them, right? So when these ugly opportunities come along, you have to think contrarian, and you just have to say, okay, look, there's a potential opportunity here, but also put it into perspective, because these are not exactly blue chip assets. As much as if you ask Michael Saylor, yeah, Bitcoin is like IBM. Yeah, okay, all right, relax, Michael. Like you don't want to get caught up in that propaganda either. And I'm not trying to push that type of propaganda. It's just I believe that we're in this lower part of the cycle, and if I'm going to invest or whatever, I'd rather do it here compared to up here, like all the other morons were doing, right? Remember I told you guys, don't buy Bitcoin over 100K. It's high risk. So stop taking. Yeah, I got to come up with some. Yeah, you're the only guy. You and Booty Cheeks are like the only guy, and Kai. You guys are the only guys that appreciate my sense of humor. Like I got to come up with something for those. Just it's like a hook to get your attention. And I'm like, man, I run out of them. I'm like, I just come up with some stupid stuff and I just say it. You know. But anyway, I'm glad you like that. I'm glad you like that, because I'm like, man, Sometimes I'm like, it sounds dumb. All right. To me, relative weakness, specifically alts and the performance of Bitcoin most recently, is something that concerns me. Okay, well, right now I understand, Kai, but that's the thing. Like, it's you just have to have the courage to just do it. And like I said, it's not like I'm going all in. I'm going in small, and if Bitcoin continues testing 50K or whatever, something dramatic, I'll just buy a little bit more. But if it keeps going in a straight line, I'm just going to stop buying, and I'm going to hold on to what I got until things stabilize. And at some point, maybe Kai, maybe we don't go to new highs, but I suspect we're going to test higher levels, maybe the low 90s or something like that. And if I see trouble there, I'll get out of some, because I'll have that option. Claude would, oh yeah, oh great. Claude would appreciate my humor. Cool, be good to know, booty cheeks. So anyway, but that's the story. All right, you guys. So I've been talking for way too long, man, and I'm glad you guys stick around with me this long. For those of you watching, like on Twitter and all that, if you're not in my Telegram channel, make sure you scan that QR code so you could go in there, because that's where all the details are. All this Bitcoin stuff that I'm talking about. Because I'm showing you the ETF here, but in the Telegram channel and on my other channel, I go over the spot market, and there's very specific levels and very specific trade ideas, and it's all free. So you guys should all be in there. Okay, I have no critique on you. It's worth relatively small punt to add a little spice, right? But many think, right, Kai, I agree with you, right? What Kai is saying here, right? People think, like, especially if you listen to people like Kathy Wood or like Michael Saylor or Grant Cardone. I mean, these are propaganda cheerleaders. Like, people believe in that stuff and they think like, this is gonna be the money of the future and all this other nonsense. There's some grand ideas. You can't look at it with the grand idea glasses. You know what I mean? You have to say, okay, look, like you said, there's some opportunity, right? And when opportunities like this come along, hey, you take a little. Just like, when oil gets hammered, hey, I'll maybe buy some oil. When gold was getting hammered, but now they're pushing their highs. And when things are on their highs, I do not see that as opportunity. Where everyone else, like, hey, now it looks safe. Now it's the time to buy. Right? And we see what happens. Right? A few months ago, no one thought we were going to see these. Everyone thought Bitcoin, yeah, it's just going to keep going. So I just see Bitcoin as an anti-inflation hedge. And I see that, if we're going to go into a cheap money situation, which now looks uncertain, but if we're going into that type of situation, these things should at least stay afloat. Just like gold has been along for years. And you know how many people said gold is a pet rock? And gold is gold is whatever. Gold is a paperweight. No, gold was a good investment for 10 years, man. Silver too. You know how many people would say, oh, silver, and then they used to talk about the silver short. And when silver blew through 50, I never would have thought silver was going to go to 117, man. So, and that all came out of nowhere. So that's what I mean. Like, you don't see this stuff until it's pushing the highs. You're like, I had the opportunity. So you just have to, when the opportunity comes along, you just have to say, look, I got some money I'd like to invest, and you decide if it's worth the risk or not, and you put some in, but you are responsible about it. You don't go all in on high risk assets, right? You have to have a little bit more balanced, and that takes some effort. You have to, you can't get caught up in all that propaganda. Okay. Okay, hold on. Right. And I remember those years for a long time, man, with silver being suppressed. I remember that, and silver never getting anywhere. And now, 117 high. It's nuts. But I remember all that propaganda. And then you'd have people, the banks have a silver short and they don't let it go, and blah blah blah. And if silver breaks out, JPM is going to go out of business and whatever. It's all nonsense, right? I don't pay attention to that. I just look at the charts. And the fact that gold and silver went nuts and the other metals, that's usually a sign. That's an economic sign of an economic top usually. when you look at the business cycle. It's usually a business cycle peak. So, and the stock market has not really pulled back yet. We have not seen a bear market. Excuse me. So, next slide, I want to talk about connection with girls too. Hamid, I can tell you some interesting stories from Miami, but this is not the appropriate stream for that. But man, I can tell you, if you want to see girls, go to Miami. It's expensive though. That's all I'm going to tell you. There's no cheap way around that. But yeah, we could talk more about that because yeah, that was quite an experience. I learned a few things there. Anyway, but that's why I was saying to Booty Cheeks, I know where to find the girls now for the car. I definitely know where to find them, and I know how much they're going to cost. So anyway, yeah, right. I agree. If the stocks get hammered, right, then the party's going to be over. And we have not seen that hammering yet. And when we do see that hammering, I suspect it'll be in the next presidential administration, not in this one, or maybe the second 2 years. After the midterm, um, because that's they have a big effect on that. They have an interest in that. And Trump's been very adamant about lowering the rates, and now that we're going to get this Warsh guy, we're going to have to see how things play out. Anyway, all right, guys, I keep talking and talking and talking. I was supposed to turn the stream off half hour ago. All right, so guys, thank you so much for your questions and for your participation. I hope you got value out of the stream. Make sure you check out the Telegram channel and all that other stuff in my other channel. There's a lot of value there, and let me know what you think. All right, so guys, I'll see you next time. Right, we'll do this again. Enjoy the rest of your day, the rest of your evening, wherever you are in the world, and